What's up, traders? My name is Robert Falco with Real Life Trading, here with Jeremy Alexander Newsom. We're here to bring you your Monday Real Life Stock Review.
Oh snap, traders from around the world. Welcome to your Monday Real Life Stock Review. I got a request for all kinds of great stocks, and I'll be getting to them in this order right here. Number one, Fastly. It's Fastly going absolutely nowhere. That is correct. Now, realistically, it's just not going to bounce as quickly as it did last time back in early November, but it's at the exact same price. And if you are accumulating, you're in, you're buying, you're waiting, you're being patient, I think that's the best thing to do on Fastly here. It makes sense that websites still need to move quicker and have more storage and have more speed and capability and flexibility. But as of right now, the overall company is just going to hang out and trade sideways for a bit. So accumulate, be patient. This is the spot to go long, in my opinion, and I am a fan. I do have some $80 January 2022 calls as of today. Next on the list is AMD, and AMD is getting absolutely smash-faced thanks to some of the news on NVDA. So we'll talk about that in just a moment. But this was a wonderful, wonderful gap today. So we opened below the low of two high wave doji candles. Obviously, AMD has been intrinsically weak over the last few days anyway. It traded up to a really nice resistance. Let me try drawing that again. That was kind of terrible. So this was the previous resistance here. We traded up to that resistance there just 2-3 days ago. Yeah, that was a wonderful, wonderful gap. The 200 simple was at 81.51. So when AMD broke below that price and retested it intraday as a resistance, the most obvious short of all time. Plus, Momo was already bearish. It was actually bearish all day long. So if you were day trading this one, really the easiest short of all time. So anyway, AMD probably pulling back into some support, chopping around for a bit and doing its thing. DoorDash. Well, realistically, you actually do have some really, really good candles and really good volume here. This is not one that I love long term, mostly because their valuation means that they are selling $3 worth of food to every single door and human being on planet Earth twice yearly. So it's a lot of doors. But anyway, as far as technical analysis is concerned, rather than fundamental analysis, really good support down here, great volume, possible double bottom. If you're looking at playing DoorDash, yeah, buy the dip. Support looks nice, risk reward's really good. AAP, Advanced Auto Parts. So Advanced Auto Parts on the daily chart. Let's actually go to the weekly and just look at where this thing is at. It is been and has been consolidating for a very, very long time. Strong resistance at about 176. So this consolidation is holding up well. The COVID lows were actually the exact same lows as 2017, where Advanced Auto Parts bounced as well. A lot of compression, a lot of consolidation, and in general, it looks good. If Advanced Auto Parts takes out 188.44, buy the dip from there, but overall looks bullish. Apple, I heard they were profitable. I heard they make money. Apple on the daily chart finally breaking out, and right now today is just a retest day, which makes loads and loads of sense. Earnings a few weeks away, so earnings season is here on Apple. My overall interpretation, this does look like a little bit of a double bottom. Nice breakout. Again, let it consolidate and chill out as it comes into earnings, and most likely I would assume it's going to slowly grind higher, potentially. So be bullish longer term on Apple. It's just the smartest play that you can have because, you know, they're the most powerful, richest, most profitable company in the entire world with the most cash available anywhere. So I like it. I like it long term. Short term though, yeah, beautiful double bottom, great chart pattern, phenomenal retest gap, and it's a thing of beauty. All right, NEO still trading sideways, still consolidating. Again, NEO had a magnificent megalithic run up in 2020, right? From June of 2020 until the beginning of the year. This thing was up just so much. In fact, let's see how much it was up. Yeah, 1,000%. That's right, 1,000. So yes, it's going to consolidate for a bit. If you're playing NEO, you're most likely buying it off of the 200 simple, which is 34.25. Give it time, give it grace, be really, really cautious, patient, flexible on this one, and let it hang out and trade sideways for a while. Pfizer, well, it's Pfizer. So they'll eventually go higher. The weekly chart, the daily charts, they're all very sideways. Pfizer, the exact same price it was in 2018 January. So yeah, sideways is the key. Weekly chart is the exact same price it was in February of 1998. So long term, obviously a blue chip dividend paying stock. If you adjust the chart for dividends, you do get a little bit of a different look. This is actually the monthly chart on a dividend scale. Really, really beautiful adjustment there because stock pays such good dividends. Weekly chart's very, very pretty, and daily chart's nice. So in essence, my overall thought process, buy as low as you can, hold it, sell it high as you can, and that's Fiverr. Fubo had a really, really good gap yesterday, aka Friday. Beautiful gap and go on Friday. Amazing volume, amazing open, amazing location. All the things were beautiful. This is the 3-minute chart on Fubo. So unless you unless you were an absolute stone, if you were watching Fubo and you traded this one, you probably bought somewhere in here and just absolutely crushed it on Friday if you were watching it. That was a beautiful, beautiful run up, an amazing trade. The fact that we are already taking out that volume, not a good thing. I've never been a fan of Fubo TV at all. I haven't had any shares. I've only day traded this one. I haven't owned it, haven't done anything with it. Looks weak. Be cautious, very cautious. It doesn't look good. It doesn't look good. You know what does look good though? NVDA. Whew, man, look at that volume, up 6%. Shout out to my boy Scott McKay. Oh my goodness, so good. Great headlines on revenues. They have new graphic cards and new AI auto drive chips are being released. Strong, strong move. NVIDIA, great company longer term, and this is a distribution phase. We've been trading sideways for a while, and trust me, this is going to feel like the most clean and obvious place to buy it, which is generally the wrong time to buy when it's the most obvious. I mean, at all-time highs, at previous resistances, after it's already bounced 30%. That's right, 30% in the last month and a half. So if you bought NVIDIA down here because you're smart, congratulations. If you did buy down there, probably sell up here. And if you want to buy NVIDIA, buy on a pullback. Try to buy it at 580. Long term, obviously, in my opinion, it's a no-brainer. Great company, great fundamentals. Even pays a dividend. It's a small dividend, but it's there. I think a lot of us know exactly how they make money. A lot of us interact with their products on a daily or weekly basis. Plus, with cryptocurrencies, graphic cards, all the chips, all the things needed for mining, long term, I'm a fan of NVIDIA. I like it. Buy the dip or continue to own unless you got into a really quick trade, bought down here, want to lock in some profit, and then buy on the retest. And then Alibaba, if you're still studying gaps for day trading, this one was perfect. We did set this one up officially in our real life day trading room. So here is the setup on Alibaba this morning. Check this one out. How beautiful, huh? My boy Robert Falco getting in on the 5-minute with that high wave doji candle. Look at that brilliant, brilliant play. Oh my goodness. So here's the 5-minute chart, and look at that doji. I mean, just so pretty. Robert Falco playing that one like he can foretell the future. Entry there, stop there. Just a beautiful, beautiful gap. My friends, if you're interested in learning how to day trade and creating cash flow on a weekly and or monthly basis from quick in and out moves like that one, make sure to hop over to reallifetrading.com. It's entirely free, and I'll show you exactly why this gap was truly, and I mean in all essence, absolutely gorgeous. I do have shares of Alibaba in a SEP IRA, and I sold a $285 covered call expiring May 7th today, and I got $1.05 on that sale. Have no problem getting called away there, although I don't think that'll happen at all, and if it does, thumbs up. If it doesn't, I'll probably sell a $300 June or July covered call at that point in time. Otherwise, looking to buy Alibaba on a dip, I'll probably own some at 238 and then maybe buy a little bit more at 232. All right, folks, that's it for me for your Monday Real Life Stock Review. I'll be back on Wednesday. And until then, love life, and trade it. Bye.